Today we're going to be talking about building your trading thesis each day and the simple steps that I use to help identify the best pairs and which direction I might be heading in. Stay tuned, traders. We'll be right back. Back by popular demand is the whiteboard. Thanks for all the great feedback and comments in the last video. It's been a hectic few weeks here in Perth, and we've had some big moves again in the pairs. The last couple of weeks, we've had big moves in the Aussie dollar. We've had a little quieter market in gold, big move on Monday, but again, we're going to be diving deeper into building our trading thesis each day. I'm going to try and answer some questions that have come up from the last few videos. I'm going to be talking about narrow range days, the 3-day cycle, the high and low of the week, the high and low of the day, and the psychology behind what I'm building when I go to the market each day, what I'm building in my trading thesis, and what I'm trying to identify as the path of least resistance. All my trades are based off the daily charts or the high and low of the week. And that's really important for me because the bigger picture trade is I'm looking for that explosive move where we see the narrow range day as a sign of compression in the market. I've talked about this in the other videos with the Monday, Tuesday typically will, in a large percentage of the cases, form one of the highs or lows for the week. Now often we'll see in the 3-day cycle, if you're not familiar with George Taylor's book, the Taylor Trading Technique, back in the 50s, he wrote about the 3-day cycle. A lot of institutions and banks, bigger traders, work a lot of their thesis off of the 3-day cycle. The 3-day cycle is often where we will see the market again form a high or a low in that 3-day range. Then the market will either work to one side or in reverse or break out and continue that range for an extended move. So that's important. If we have a market that breaks out from a previous Friday's range or a previous Thursday, Friday, whatever that may be, for a reversal, we have a market then that is either making new lows or new highs depending on which way that it's reversing. And then the following day, the Tuesday, we will either see a peak formation reversal, now giving us a high and a low for the week, potentially, or we'll see a continuation of that range for a range expansion, which in that case we have now day 1, day 2, and then potentially on Wednesday, day 3. So if we have a Friday, Thursday, Wednesday, Monday, Tuesday, if we have a Monday that breaks out and Tuesday breaks out, we now have a market that's making lower lows. So Monday, Tuesday, now this market could come back on Wednesday, but we have our high and our low now for the week. And again, depending on how this has formed on Tuesday on our 15-minute charts, we may have had a peak formation reversal, or we may just have had a market that's pulled back inside, excuse me, on the Wednesday. But we're going to look at those charts on the British pound. We're going to look at the daily charts. The importance of these narrow range days, if you haven't read Toby Crable's book, you can look up Toby Crable. I'll write that down. He did a lot of trading with inside bar breakouts, narrow range breakouts. When we get this 3-day cycle, either coming out of a narrow range, we can have a weekly range in 2 days. As we saw this week on the pound Oz and pound New Zealand, we saw some big moves come out of that narrow range compression on Monday, Tuesday after the news. So often the news calendar can act as a catalyst to propel these next 3-day move if it's an open drive breakout. Every day though, I'm basing everything off of the highs and lows of the week. Are we making new weekly lows or new weekly highs? So in that case, we're moving more in one direction, which again tells me which direction potentially am I looking to be trading in, or if the stop hunt, when we get to day 3, does the stop hunt at day 3, level 3, blow off in the direction of that 3-day move? So we saw an example of that this week on the British pound. We'll look at that again. The market made new lows 3 days in a row, but on the 3rd day, the stop hunt was breaking out, taking out the previous day, as opposed to a creeper back up before it went down. Creeper back up before it went down. Day 3, it blew off in the direction in a small 25 pip range, and then jammed in 1 push, 2 push, 3 pushes for the reversal. And that reversal took out the daily high. Then they auctioned back in, and on Thursday, they hit the high again. So now we were making new highs. So on Friday, we went into consolidation, and they blew off in the direction of that 3rd high before dropping 100 pips and pulling back and going into the close. We're going to look at that chart. That gives us an idea potentially of where we may be heading next week for a possible measured move or a continuation, depending on how that trades. It's important to understand the psychology behind multiple time frame traders. If we have a daily chart and the market breaks that, we have breakout traders in the market. The next day, the market takes out the low. We have breakout traders in the market. These traders may now be at break even, or their stops are at the high of the day, which is often why we will see the market stop hunt back to the high of the day, come back and get traders who are long, hit the high again, getting both sets of traders after the money before working its way back down and starting back for the move through the low of the day. It's always about stopping out traders who are in the money. These breakout traders on level 3, if you've taken the breakout on day 2, when they pull back inside, these traders are now in minus equity. They haven't been stopped out yet until the market comes back and hits them on Thursday. We're going to look at some examples of the narrow range days. Narrow range days will typically be where an area compresses either at the end of the week or the beginning of the week before it's about to make another potentially explosive move. So these narrow range days, if you think about a market that opens up high and closes down low, or opens up and closes up high, these are normal days, okay? Normal days. But if you're buying up here, if you were buying up here on a daily chart, your stop might be down here. But if you're buying on a narrow range day, right before the market potentially is about to break out for a large move, these are the days that can help us identify when the market's compressing for a potentially bigger move. Those are the days that when it takes off, it trends for the entire day. And those are the days that I like to look for, because we usually get at least one of those a week on most pairs, because again, that weekly cycle, the 3-day cycle of moving in one direction before reversing, or moving in one direction and pulling back and continuing that move, helps to identify in that Monday to Friday cycle when we potentially are about to have a large move. So I'm always watching the daily charts. I base everything off the daily charts. The daily charts are very similar in terms of how they move throughout the month. They will hit monthly highs, monthly lows. They'll reverse and stop out traders who are long from one week or short from the other. There's lots of opportunities just for looking at the daily charts bar by bar, but also looking at which trades are still in profit. The high and low of the week, that's what gives us our direction of bias. So if the market's trading back and forth, well, obviously we may be in a range bound market. But if the market's made a high, made a low, and continues to make new lows, we now may be in a 3-day cycle for a potential reversal, or we can form our bias based on the direction of the stop hunt in Asia as to whether or not we're going to continue that moving down, or if the market is going to take us on level 3 in the direction of that trend and trap us down low or up high if it's an up 3-day cycle before reversing. And that reversal doesn't necessarily have to go all the way back, but it may be enough to trap traders in the wrong direction and then shift the market for 50 or 100 pips. So the high of the day, the previous day's high and low, when this level gets hit, unless it's a level 1, day 1, level 1, a trend trade day, often when they break out from a previous day's high or low, they will pull back, because if you think about the psychology behind that, if you're in a breakout trade, if you're going long and your breakout order is hit early in the session, you're long up here. They will often pull back 25 to 50 pips from that trade, because that is enough, again, to stop out most retail traders, or if the position is large enough, to put some serious heat into a trader that's in the market triggered on that breakout. Now that's obviously different than a market that breaks out and continues to trend in the next session, versus a market that breaks the high and pulls back, or breaks the low and pulls back, but now you have breakout orders triggered for other time frame traders and larger players in the market. But it's important then to look back, how far back does the market pull back as we head into our next 12 candle window. So the psychology again is who's trapped, who's in the market, who's in the wrong direction, where's the money, where are the stops at. Again, the stops are above the highs and lows of each session, as well as the highs and lows of the day and the highs and lows of the week. So if we're working one side, at some point that market will trap traders in the wrong direction, blowing off the move and shift and reverse, and potentially move back for a day, 2 days, 3 days, or maybe completely before resuming its trend, or it may not come back at all. That is the situation that blows out most traders' trading accounts. They get caught in a level 3 down low or up high before the market reverses, and in some cases may not even come back. So always the psychology behind my thesis each day is, are we making new lows, or are we making new highs, or are we just going back and forth from the high and low of the week? If we're making new lows or new highs, what is my thesis based on how the market trades off of that low? Is it working back into the market for a move down? So again, even the psychology of understanding a profitable trade may have trailing stops 25 to 50 pips from the low, but also going back into the trend gets traders second guessing as to whether or not they should cover their position, hold on, or if it's going to come back and reverse against them, because they're uncertain. Down here, they're feeling confident, they feel great, they're in the money, they know what they're doing, and then as it comes back overnight and into the Asian session, they start to sweat, they cover it, only to watch it run away and make another new low or another new high. Now on level 3, typically day 1, day 2, day 3, Monday, Tuesday, Wednesday, people keep saying I can't find the levels. For me, everything starts again on Monday. Day 1, day 2, day 3. And then I'm looking, are we making new highs? Are we making new lows? Or are we just trading back and forth? In some cases, we'll open up on a Monday, we'll make a peak formation, we'll put a peak formation in on Tuesday, and we'll go back up to the high of Monday. And traders will say, well, which way are we going? Well, at this point, we just have a high and a low. But if they break out and they continue to make new highs, Wednesday, Thursday, well, obviously, then we have a bias. And that comes back to our daily chart, which we're going to look at. So hopefully this makes sense. I'm going to explain these in detail on the daily chart, and we'll look at the British pound this week, and we'll take this each day based on the days of the week from last week, narrow range day, day 1, day 2, day 3. Have we made new lows or new highs? If we're making new lows, and again, on day 2, do we have a peak formation that's opposite to Monday, or does it come back inside and continue the move with the trend? Day 3, are they trapping anybody, blowing off with the move? Day 4, which way are they heading, or are they consolidating? Day 5, Friday, is it a reversal day, or is it trending and continuing the move off the low or the high? So hopefully you got some value from that, traders. Let's take a look at the charts. Again, thank you for all the great feedback. Thank you for hitting the like button and the subscribe button. And if you haven't done so, turn on the notifications. I'm going to try and put up my analysis each day of the British pound as we head into the day, looking at the levels, the daily charts, looking at all of this each day, and then putting out my thesis to you guys, and hopefully we get some great opportunities from that. But again, thank you for all the feedback. A lot of questions. Where do I start? What time frame? What videos? It's all in the Start Here section on the playlist. I'm trying to break it down even simpler, stepping back, looking at the big picture. My big target are these narrow range days. Every other day I go to the screen, I am purely working off the high and the low of the day based on, are we making new lows or new highs? Has the market trapped anybody in the wrong direction? Where are the stops? Because if there's stops above or below and they're jamming it in, they're going to come back and they're going to get the money. Thanks for the feedback. Stay disciplined, stay focused, and may the markets go with you.
Good day, traders. Stacey Burke from Stacey Burke Trading. Just continuing our discussion and looking at building our plan each day, or how I build my plan each day. I'm looking at the bar chart of the British pound right now, and one of the things I do each week as I'm looking at my high and low of the week, the Friday level as we head into the next week, and whether or not we have narrow range bars. And I've mentioned before, I just use this narrow range indicator. It doesn't always pick up the bars that are potentially compressed because the range may not be less than the last 4 days, but often I can visually spot that the gray line is my Friday. And so we won't get into that this much on this video, but also the monthly high and low, how the cycle starts again each month, and also the 1, 2, 3s that we'll see, or the continuation moves at the rollovers of each month. The same patterns happen that we see on our 15-minute time frames and every other time frame because they're fractal. But each week when I come to the screen, I'm looking potentially for a market that has given me a narrow range bar, possibly on a Friday after working up. For example, we had that on our British pound last Friday, and there was on a few other pairs as well. Aussie dollar, euro. These same patterns show up on every instrument, but this is a fantastic example of how the market broke out from the high of the month, first bar, again, open drive, pin hammer. I'll put a candle on this. Pin hammer, first bar of the month. And again, just using measuring tool, whether or not we'll get a full expansion down, I still think we are on our way down, and I'm going to get into that as we get into our 15-minute chart. But when I go bar by bar, again, we can just count the 3 days. You can do this on your own charts, any instrument. Just go and do some homework. But when I go to my Monday, Tuesday, Wednesday, people are always asking me, how do you figure out what level you're on? I don't figure out levels. I'm just figuring out on day 1, it's Monday. Day 2 is Tuesday. Day 3 is Wednesday. So if we target each one of these days and start the cycle again, we see, obviously, the previous week we broke Friday's high. We have a key reversal set up, but we break the high again on Tuesday. And we'll again, I'm just looking for evidence of price generated information on the larger time frame. This is prior to going to the screen on our 15-minute chart. But each day, so on this Friday's high and low are critical, because when we're on the 15-minute chart, based on how that market sets up and trades inside of Friday's range, will give me a bias as we're heading into the 12-candle window. If it hasn't done anything, then I'm working from the high and the low of the day. If it breaks one of these boundaries in Asia or in London, that can potentially be an area, as we see on this this particular Monday, where the low was broken of Friday. We'll just zoom in on that a bit. I'll put the candles on there. Oh. So we see where Monday broke Friday's low, and then Friday broke Thursday's low and came back inside. And then Monday auctioned down low in Asia before reversing, and we'll see that on the chart and taking out Friday's high. But we have day 1, day 2, day 3, and the market is still in breakout mode. It's still making it closed outside of the range. And again, come back to the psychology. The previous week we had day 1, day 2, day 3 was a bull pin. Traders have been caught long before the market reverses and takes out the low. So on this particular week, the market continued to trend before coming back 1, 2, 3. Again, our stop hunt 1, 2, 3. So 1 push, 2 push, 3 pushes. Day 1, day 2, day 3. Day 4 is inside of the high, but the low takes out the low of the day. That's the first sign of weakness. We're in a downtrend. We get a 1, 2, 3. They pin the low and pull it back inside. Now, again, even just thinking of the psychology of that, breakout traders shorting the market are in the market now. They have a stop loss possibly up at the high of the day, but they're underneath all this heat now where the market has come back. So again, the gray line is our Friday. We have day 1, Monday. And we have stops obviously at the low of last week. Day 2 takes out those stops as well as breaks the low of Monday. Wednesday trades and breaks the low of Tuesday. You can see when I project Tuesday's low across how the bodies of these candles stayed inside of Tuesday's low. So day 1, day 2, day 3, the market pulls back inside. Now again, first and foremost, as we come to the screen, my bias is that we potentially may have a move down because we're in a big downtrend, down breakout from the monthly lows. And we've had a 1, 2, 3 pin hammer that's taken out the low of the third Wednesday, the Wednesday low, pulled back inside and then made an inside bar on Friday. Inside bar in a downtrend after a 1, 2, 3. So again, the 3-day method, we had day 1. Day 2, the market broke the high and pulled back. So again, breakout, pullback, continuation. Then we went into a trading range on the Thursday and an inside bar. But important to understand that that low was broken and we potentially now have other time frame traders in the market. And they've been in early, the first mouse. So again, you can go back through each one of your charts, monthly highs, the beginning of the month, day 1, day 2, day 3, low bear. As we head into the new month, we break highs, pull back. Day 1, day 2, day 3 inside of the range. So again, the high and low of the week has been set, and then each day as we head into our next session, we want to be working off the highs and lows of the week if we can. Or if we're trending, we want to be obviously in an uptrend, buying low for the continuation. So if the stop hunt is down, we can trade with the trend. But understand the psychology as these markets. This week is a great example. We'll look at it on the 15-minute chart. The low of Monday is broken. And you'll notice that on Wednesday, they broke the low of Tuesday, but they also came back and hit the area where the breakout traders got in. So if they were at break even, they got stopped out. or if they had positions exposed, they were now from profit into loss or into negative equity. They hit the high of Wednesday on Thursday's bar. So again, breakout traders on Wednesday who are chasing this move are now underwater. The bodies are staying back above the wicks. Okay, so again, on Friday, we've made a new high Thursday. We could get a follow through down, but the stop hunt was to the top side first before they reversed it. And we'll talk about that on the 15-minute video. So again, day 1, day 2, day 3, Monday, Tuesday, Wednesday. That will typically tell us our high and low for the week. And then we can look at the screen each day and know, are we in a continuation for a breakout trend day, or have they put a peak formation in and we're potentially reversing back to the other side, or are we just in a range-bound market now? So looking at last Thursday, we'll start back at the beginning of the week. Actually, we had Monday, Tuesday, they put a peak formation low in. So again, on the Monday, we broke Friday's high. Blue line is Friday's high. The market made a new high, took out Friday's high, pulled back, and again, breakout traders, if they're filled at this blue line, we're looking 25 to 50 pips, because that's enough to put some serious heat into breakout traders, or to take a loss, cover their position, or traders who are in profit from over here, the stop hunt comes back. But the peak formation was down in Asia. Now, that's not to say they can't roll over, but they went down in Asia and came back up on top of the Asian range. As we head into our 12 candle window, stop hunt is down. We're targeting the blue tracer. So again, breakout traders are in. Just psychologically understand they keep getting breakout traders in, and then they put heat into their position, and they also stop hunt traders who are in the money from London. London goes up, hits the blue tracer. Triggers breakout traders, other time frame traders. Then they come back and get the guy who's long in London. So we're making new highs. Day 2, new highs, peak formation low in Asia. They come back up into the close of the session and go sideways. So again, peak formation is down. They go into consolidation. They break the high. So again, I think traders, you need to understand one thing. We're not talking about historical trading. Okay, so when I get comments like that, I got to shake my head, because you're not understanding the process and the psychology behind what's happening. So whether or not I traded this, or I traded London, or I traded the US is irrelevant. What's important is to understand the process of how the market is unfolding, so that when we head into our session, we have a thesis. The market's making new highs. I can expect stop hunt down. Stop hunt down, rise. Okay, the market's making new highs. We're on day 3. The market makes new highs and trends all day. So we get the Monday, Tuesday, okay, the 3-day method. Our initial balance, Monday, Tuesday, we break out at Tuesday's high. We break out and we trend. 1 push, 2 pushes, 3 pushes into the close, and go sideways. We'll get this blue line out of here. Okay. So we're making new highs. This is last week, so this is before this week started. Then the market, we looked at this on the daily chart. Remember, we had the pin bar that triggered the previous day's low. Now that was the BOE. So again, 3 days up. The market goes down 75 pips before we even get into the London session. So we're inside of the high and low of the week. So I mentioned this earlier. High and low of the week, high and low of the day. I don't want to trade anywhere else. And the reason is because if you're inside, you might be in the right direction. But I want to be trading where my risk is the least amount when I'm at the high or the low. Now, if it's an uptrend and I'm trying to sell the high, well, then I've got my thesis wrong, unless it's a stop hunt to the high after they've broken out and pulled back. So BOE goes down and they come right back up. They don't take out the high. And there may be a reason for that. Okay, we've got breakout traders in the market. They've shorted the market down here. This is enough to wipe them out. The market then goes up in Asia. Friday morning goes up. Puts a peak formation in. Doesn't take out the previous day's high. Drops down, puts a low of the day in place. They go up in London and they just touch Thursday's high before dropping down. So the 3-day method, okay, remains, our high of the week remains intact on the Wednesday. But we also said that Friday was an inside bar. Okay? An inside bar at the high of the week in a downtrend. And the market took out the low of Asia. So we have a sideways consolidation. It hits the blue tracer from the previous day's high, below the high of the week, works its way down, hits the stops, pulls back, and continues to work its way down. This is a sign of weakness when we are at the very top. They took out the lows and continued down. The market then goes sideways in Asia before working up, and again the round numbers, 50s and zeros. The pound loves 50s and zeros. I'm going to say that again. The pound loves 50s and zeros. But the point I'm emphasizing, we're at day one. We have an inside bar at the high of the week on Friday. It's a narrow range bar. Narrow range bar will often precede a large moving day. Now Monday often may just be a narrow range breakout pullback after a narrow range day, and Tuesday may be the day. But if we're expecting a down day, we can expect a stop hunt back against the trend. Traders have shorted this up here in the U.S. session, anticipating potentially a reversal on Friday. They don't get that. But the market comes back, stop hunts into the trend, into the move down, back up inside, makes a higher low. So just to come back, another comment I got was, it's too hard, end of day's too hard, I'll just trade with the trend. I'm curious to know, there's two things I'm going to comment about that. One is, that's fine, except you're still going to get these pullbacks, 50, 25, 50, maybe 75 pips against your trend trade. And also, I'm curious, how are you ever going to trade size? How are you ever going to have a one bar stop and get a scalable trade system? So it's a fallacy to think that it's any different on end of day. You're going to be under major heat. So if you want to put a 50% entry order in, well, it may only go 25%. All these factors come into play. And again, I don't know how you're going to ever build those trades into size. So again, the market breaks down. We have a new low now. It's taking out the inside bar. But also we'll come back to the BOE day, and we'll just project that low across so that traders can see. We'll get rid of this one, where the low of Thursday was. So now we've broken Thursday's low. Inside bar, we break the low, but we've got our 1, 2, 3 sell high setup at the London Open. Again, if I think it's going down, I'm expecting a stop hunt high. So they come back and again, breakout pullback, 3 pushes into the U.S. Open off of Thursday's low. Day one. We now have day one. So there's our range, our high and low for the week. For Monday, I'll move the screen line up. Actually, we'll leave Thursday's low there for the minute, and we'll go back and we'll just also look at Tuesday's low, which they already got on BOE, so we'll put on Tuesday's low, the U.S. session low. So again, they came down. We didn't quite get the U.S. session low, but we have day one. The market pulls back in a 25 pip box. So no peak formation. So if we're going to go up, we might see a peak formation come down in Asia, but Asia goes sideways. The market breaks the low again. So again, I'm not even talking about trading. We're just talking about the 3-day cycle. new lows, the pullbacks. So this may be a peak formation now for the reversal up in the U.S., back up for the low of the week. But the market stop hunts after it hits the low of the day. We got breakout traders in the market. The first place they go, of course, is back to the high of the day, because that's where traders shorted it today. But also we have breakout traders in the market. And now those traders have a negative 50 pips against them. So again, that's enough to, people talk about end of day trading, and it's, how are you doing it? If it's breakouts or whatever, but you're still minus 50, and then later you're minus almost 100, 75 plus. So they come up 1, 2, 3, go sideways at the numbers at 50. Again, the pound loves zeros and 50s. It pulls back above zero, goes sideways. Stop hunts down to 25, reverses at 50 at the fourth candle of the second hour, the London hour, and then bang, 50 pips to the high. But we have new lows. The market is making new lows. Day 2, new lows. So now we have day 1, day 2 making new lows. Okay, we'll just put that high in on Tuesday. So we've got our new low. Our thesis is that the market potentially is going to continue to go lower, but if it stop hunts in the direction of the trend, so the previous day we blew off in the direction of the trend, but it came back up, hit the high, but it auctioned back down to the low and went sideways. Day 3, level 3, will often blow off in the direction of the trend. And that was a fast breakout on Wednesday. So again, 1 push, 2 push, 3 pushes, it pulls back inside. And interestingly enough, takes out its high as well. So Tuesday took out its high. We stop hunt to the high on Wednesday. Potentially now level 3, 1 push, 2 push, 3 push, a 33 trade on level 3. Goes back inside and goes sideways into the close. So day 4, we're at double zeros. They start going down again. And this was where I mentioned that if this market breaks this low, we could potentially be in another day of an range extension on Thursday. But the market jammed in 3 pushes, 1 push, 2 push, and then 1, 2, 3 in the first hour before pulling back and going sideways, and again taking out the high of Asia, high of the day, without triggering the previous day's low. If that's the case, our next target potentially could be the previous day's high, which it goes to. Doesn't take out the previous day's low. They jam it in. It comes to double zeros. It works its way back up. Hits the blue tracer from the previous day's high. Now we have breakout traders potentially going long, but we also have short traders stopped out who were short at the low of the day, who may have had their stop above that high of the day. So again, the psychology of working from the high and the low. It doesn't hit the previous day's low. It gives a trade off the low of the day. The next obvious target is the high of the day and also the previous day's high. We're down low, jammed in on day 4. The market comes off the low of the U.S. session in the stop hunt, back up, and goes sideways into consolidation. We've made a new high. Market goes sideways, pulls up above 50, pin hammer at the London or the Europe Open. 1, 2, 3 to the high to the double zeros at the second candle of the London hour. I need to emphasize again the importance of understanding the timings. The timings are critical. We're at the London Open on a 1, 2, 3. Traders are chasing this as a trend trade. Okay, we'll come back to this in a second. But we have on Tuesday, we have Wednesday, we have day 3, but we make a new high. We take out the day's high, but on Thursday we make a new high. So now we have 1 push on Wednesday up, 2 pushes on Thursday, and we have 3 pushes on Friday. Remember, we talk about the market stop hunting first in the direction that it potentially may reverse against on a trap. Now, when we're making new lows, the market still pulled back against the trend before breaking down. Day 2 came back up, stop hunted the high of the day, and then fell back down to the low. Day 3 jams traders in down low. Day 4 jams them in without taking out the low and reversing, hitting the high of the day, the high of the previous day. And then Friday stop hunts, triggering breakout traders. Okay, so we got new highs. They trigger breakout traders. Again, the psychology of understanding what that means. We've got these traders now. Every time a previous day's high or low is triggered, those traders face a 25 to 50 pips stop hunt. Unless it's level 2, but they don't come back inside. Level 2 trends. It breaks out and continues. It doesn't come back. So the market, first place it goes, breaks the high of the day, which is also now our low or high of the week, even though our high of the week is way up top. As the daily highs drop down, that becomes our new high of the week. They break it, they pull back, pin hammer after the pullback inside. So again, timings, first hour doesn't stop there, doesn't give us a candle formation for a reversal. London continues the stop hunt to double zeros, hits the blue tracer. Okay, so the first the first hour does not trigger the previous day's high. That's why when London breaks out, the importance of not only does it trigger breakout traders, but the next place for it to hit numbers-wise, this is a 50-pip box. 50s and zeros. I love looking for the Asian range trading off of or to one of these numbers because it's going to go 50 pips. If it's at a quarter level, it's potentially going to get stalled at zeros or 50s for 25. So if you're in a move out of the Asian range, off the numbers, you're looking at potentially a 50 pip move right off the bat. Goes up, goes sideways at the double zeros, drops down, engulfs the pin hammer in the third hour, back down to the low of the day, and the measured move down through to the double zeros before stop hunting back into the US session, and then taking out the lows of the day and hitting the previous day's low. Again, the most important part to understand about previous day highs and lows is that I'll put a little dollar sign there. Oops. There's money there. There's money there. Okay? There's stops there from people who have shorted the market. There's breakout orders. There's take profit orders. Okay? But down here, if you're a longer time frame trader and you're using the highs and lows for your stops, okay? First of all, the low of the day might be your stop. Second of all, the previous day's low from the breakout day may be the stop. And then we got traders going long on the stop hunt intraday. They come back and they stop out those. So it's a game of constantly going back and forth and hitting the stops. Now, if we zoom in on this, I want to just close on saying that we have this big down move in progress. We have day 2, day 3, and then we have 1 push, 2 pushes, 3 pushes on Friday. Okay? And the market put a peak formation high in and a peak formation low in before pulling back into consolidation. I don't want to jump the gun. Don't know what's going to happen. I can only trade what happens. We're in a box where we're up to 50. This market, if it does break this low, okay, we could be in a measured move potentially for a move to continue that down leg back down somewhere maybe 25-50 area. Now, I'm not saying that's a trade. I don't know, but we had 3 pushes back up against the move down. They've pulled it back into consolidation inside of 50 and 0. We'll see what happens this week. But again, traders, day 1, day 2, day 3, high and low for the week will be set. They'll work one side, or they'll trade in a trading range, or they'll trade back and forth, or we'll have a breakout, pullback, and a continuation for a trend week. So hopefully you got value from today's video, traders. Have a great weekend, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.